What if you could invest in real estate, offices, apartments, even shopping centers, without buying a single property yourself? No renovations, no tenants, no phone calls at midnight, just a simple, professional way to grow your money through property. Well, that's what the OPCI, or Organisme de Placement Collectif Immobilier, is all about. Hi everyone, welcome back to the channel. Today we're exploring a lesser-known but super practical way to invest in real estate in France, the OPCI. We'll break down what it is, how it works, who it's for, and whether it could be the right tool for you. Let's get started. Before we dive into today's topic, please note that the information provided in this video is for educational purposes only. It is not financial, investment, or tax advice. You should always consult with a licensed professional before making any financial decisions based on this content. OPCI stands for Organisme de Placement Collectif Immobilier. Basically, it's a real estate investment fund that lets regular people invest in large property portfolios. You don't buy an apartment, you buy shares in a fund that's professionally managed. The fund itself owns offices, shops, logistics platforms, health centers, or residential buildings. You earn money in two ways: from rental income paid out as dividends, from the value of your shares increasing if the properties appreciate. It's similar to a SCPI or a REIT, but with more flexibility and fewer rules on where and how it can invest. OPCI is not a savings account. It's an investment product. That means your money is put into real estate assets chosen by professionals. The fund diversifies across sectors and locations, sometimes even outside France. You receive returns based on rent collected and property values. For example, Emma invests $10,000 in an OPCI that owns office space and retail parks. She receives quarterly dividends based on rental income, and if the fund grows in value, so does her capital. Here's why people love OPCIs. Passive income. You receive regular payments from rents without being a landlord. Diversification. One investment gives you access to dozens of buildings in multiple sectors. Entrance. You can invest with just a few hundred or thousand euros. Professional management. Experts handle property selection, tenants, and maintenance. No need for a loan. Unlike buying property directly, you don't need a mortgage. It's real estate investing made simple. Of course, OPCIs aren't perfect. Here are the downsides. Risk of loss. If property values drop, the fund's value can go down too. Not liquid. You can't always sell your shares instantly. Some funds have waiting periods. Fees. Like most managed funds, OPCIs come with entry, management, and exit fees. No guaranteed return. While income is usually stable, nothing is 100% secure. So it's a medium-risk investment, not suitable if you need your cash back fast. Investing in an OPCI is straightforward. Choose a provider. Banks, insurance companies, or online platforms offer OPCI funds. Select a fund that matches your goals: income, capital growth, or sector preference. Fill out a subscription form, provide ID and tax info, and transfer funds. You'll receive shares and your money is immediately invested. The minimum investment can vary, but often starts around $1,000. Can you get your money back? Yes, but not instantly. Most OPCIs are semi-liquid, meaning you can request to sell your shares, but it might take a few days, a few weeks, or until the fund processes the next redemption window. Some are listed on secondary markets for faster selling, but always check liquidity terms before investing. Let's talk about taxes. Rental income, dividends, is taxed as regular property income. You'll pay income tax based on your bracket, social contributions, 17.2%. Capital gains are taxed when you sell your shares, depending on how long you've held them. But if you hold your OCPI in an assurance FI, taxes can be much lower, or even deferred for years. So the tax efficiency depends on where you hold it. Final thoughts. Please note that the information provided in this video is for educational purposes only. It is not financial, investment, or tax advice. You should always consult with a licensed professional before making any financial decisions based on this content. To wrap up, OCPI is a smart, modern way to invest in real estate. It's simple, diversified, accessible, and hands-off. It's not a get-rich-quick scheme, and it's not 100% risk-free. But if you're looking for passive income and long-term growth through real estate, OCPI could be a great addition to your portfolio. Thanks for watching. If you found this helpful, give the video a like, subscribe for more financial tips in France, and tell me in the comments, would you invest in an OCPI or do you prefer traditional real estate?